Hey guys, how are you doing? How are you? Good to be back with you. It's the Market Sniper. It's also the Crypto Sniper and the Reset Sniper. Are you subscribed to all three channels? Oh, yes, indeed. Okay, quick one for the Market Sniper, and we're going to look at a couple of equities and the index as well, the SPX. Why not? Why not? Why not? Why not? Our community got short of this fella in and around somewhere on the early break on the rising wedge there in our structure of patterns. So some got on real early, some caught the break at this point takeout and have since done nicely. There was a second chance. I just missed that. Never mind. It's all good in this land. Very interesting one. It is United Health Group. I have tweeted it out. We were in, once our community has taken in their seats and it's progressed nicely, we can share it with you. What have we done? Just to give you an idea of why this one's particularly interesting. Have a little look, I say. Have a little look at its history. And it's been a parabolic history for some period now. So you can see this was actually at one point right down not so long ago, 2009 lows, a $20 stock, now trading 222. You could have got in with us at the 250s, 255s, etc. So this has been a particularly interesting one, and if you're prepared to go really far back, you can see that this is a parabolic story of great success. A lot of it might have, I don't know the fundamentals. This is a thing. I trade technically, but who knows how much Obamacare might have added to that old point. I think healthcare, who knows what's going to go on in there for a while now, but this looks like something that could pull back some way. So we could be getting what we call a first setup in a new trend, and we like it for the short side, and it's broken down. And in fact, it's disappointed at our early entries precursed, for those that took them, precursed a announcement of earnings disappointment, which is what brought it across down and has given it this path. Nice little return move possibly to some of the way, but looking good. Update on Tilray. We gave this one to you free early as it broke. We gave it to you at the 79 and we said, guess what? We are calling in excess of a 50% going on 60% downfall to see the number 36.57. That's a rough cut number. It can be a couple of pence either way, and normally our targets are just run. You probably wondered at the time, what is he on about? You could have been entered at the 79s and you would now be sitting at 49. That's $30 lower. $30 over 49. That's pretty good. It's pretty good so far. You've got the bulk of the move now, and we are trading currently 49.22, and it only requires $13 more to make the target there. And we would certainly close 60 to even 80% of the position at that point. So that was given to you early, and you could have had, oh, wait for it. When last did you get an 11.38 trade? I don't know. Maybe you don't value risk reward trading. Maybe you don't like quick progress. One little second chance revisit. Quite low volatility, consistent down moves, the grind lines breaking, always back in your favor, gap up today and closing it all the way back down exhaustive. That is not scary price behavior, and it's consistent moves, nice little profits every day. We have five shorts. I've told you about United Health and Tilray, which was the advanced party of the shorts. We have five newer, well, the others are newer. Some have just broken and done really, really well. We have five shorts. In fact, if you're interested in trading, and only if you're interested in trading and recognize trading is not easy, despite what all the other people tell you, it's not always easy. It takes patience, deep-seated psychological change, and you want to talk to someone like yourself who was sitting where you were sitting 2 years ago and contemplating coming on board for HVF method trading and being part of the community. You can book a chat on our website, themarketsniper.com. Anyway, back to this. So looking decent, $13 more to go for the target. And this is the nature of the game. Take that amount of risk, be patient, and grab the reward that is higher. By the way, during this period, but nothing's been achieved yet. This could spike up and invalidate, and we could be stopped out. So there's no trumpets. It's part of the game. We expect to lose some. We expect to win some. But it's looking decent so far. And potentially the others might be something like that. I've shown you United Health. You can go have a look at it. So equity shorts, liking a few select ones. On the US markets, decent liquidity, and in fact I'm suspecting that our SPX may take a rest at some point. So let's talk about the SPY, shall we? Let's get a little bit more real estate and say goodbye to those quotes and get this in. And in fact, before we do it, let's go big picture first. So give you a slight view of where we're all at. This target was made on only the HVF head and shoulders. If you don't know how to do an HVF head and shoulders, you would have lost money and you would have been waiting for that target, and then the snapback rally would have taken you out. So what did you get here? Well, this point, if we go back here, this point was the high since that high. Let's get into draw mode. The high since that high, and then there you go. And it was a very small, quite low vol double top, kind of like an M, and it went straight into capitulation. That was a key level of significance on the way down, and in there we go, and then we spilled, and that was our target there for the head and shoulders HVF. The interesting point is, if you're looking at this as a trader, you would have seen your rising wedge squeezed into that exhaustion. And you often get that pop out the top. See it there? Pop, a little bit of a sign. You got a second one before you spill. This is what we notice about wedges. And what are we getting here? A wedge structure as well. And we are knocking against that top door. And my suspicion is, well, we're either going to make a marginally higher high, or we're going to pull back and spill down before making that high, or alternatively we can actually pop and run out of that. In other words, it can be a real blow off and take out the high with momentum. So there's three options. Generally though, I would bias to the downside on the two options that sees a break to the downside. There has been a lot of re-inflation thanks to the Fed. We called for the October-November 18 to be a critical period. We said it in July. We said there'll be a topping and it'll be a critical period. It'll be 33 months since the beginning of the interest rate hike cycle. And we said, beware October. Beware October. What did you get? That's what you got. You got your reflation Fed entire U-turn from we're a long way off neutral rates to we're almost there to actually we're done entirely for 2019 virtually. That was some little stock market based U-turn. Some will say Trump. I'm not interested in the dog and pony show of the politics that you're being fed. But I would expect another push, one more push up. It's not yet ready to go in my view. Let's close that. I wanted to give you the macro so that you understood where it is. Where we are now. Let's close that. Let's take it into the 2 hourly. Let's double click there and let's go, in fact, let's go a little bit more deeply into this. So we're on a shorter time frame now. Note that slip out of the wedge on a what I'd call a tactical retreating descending line of support, and now you've had a move up of it. So there might be a little bit more structure to come. We're not spilling this second. However, what sometimes happens is we get a squeezing structure after coming out of a rising wedge, and you may in fact get something like that. And then it gets ready to break down. That could occur. So there's a distinct possibility. So don't get too bullish on the second rally move. You might also get that double M top that you saw in the other instance. So price behavior has a couple of playbooks that it uses, but there is a finite number of how things tap out when they're close to done. And as someone who stares at a lot of charts and likes to be early, I've seen quite a few of them. So I would say there's a reasonable chance that we'll get another rally tomorrow into round about midweek, then a sell-off, and then getting a little bit more concerned, flattening out. Friday could be iffy. Thursday or Friday could be iffy, or going into the new week, and maybe we get a move. We don't have to get a huge move. We could get one that retraces back after a bit of a sell-off and then congests lower down and then sets up new structure, and could take its time. It could bleed out slowly. It could sell off in a nasty fashion. It's not for me to know, but it will be determined by what happens next. If we get a nice squeeze structure, I'll be ready and aiming to go short. We already have a lot of equities that have given us that are ahead of the index in certain industries. entries that are doing that. In fact, as I've mentioned, I'm calling for a potential 66 risk reward, and some instances on certain entries over 250 risk reward on individual entries. So I talk about trade ideas and individual entries that have gone with really tight stops on one particular play that we're taking in our premium community that we've been discussing for a while, and that have just gapped and broken in our favor. You will find out that when you have a man-to-man chat with someone just like you, only 2 years back in time. Okay, so that's on themarketsniper.com. Let's just finish with a quick run by oil. Let's have a little look at oil. You'll see this has also been on a bigger time frame, and I've indicated this on a bigger time frame. Maybe that's a bit too big. Maybe we can work with the weekly. In fact, let's stay like that. You can see as well in here that we've had squeeze up structure. In other words, my expectation is energy prices are going to come off. We are not that strong in economy. The Rockefeller tax needs to back the hell down. Things are not rosy. Things are not rosy at all. So there's that rising wedge. There's that rising wedge, and you've had your pop out the top, impulsive, final bit of exhaustion. Let me thin the pen a little bit. And now you've got a shooting star on previous week. And what have you got so far? It's only a few days into the week, but we're already getting an indecision, small-bodied red, possible follow-up shooting star, or maybe even before the end of the week, we can come through that wedge. So I am thinking oil is going to tap out, and I'm thinking it's ironic that we're talking so much about rising wedges and the S&P's at a rising wedge very close to the previous high. Only thing is we've given up all notion of serious monetary policy again in the mighty big old US of A. So there's much less in the locker to unleash. When will we be going to rate cuts and QE again, he says. Next move, I suspect, will be down on interest rates. And I think it'll be a little bit of a shorter season. Isn't it great to be able to short? You need to be able to have a real method, a real mindset, and you need to know what you need, because timing matters in shorting, and generally, particularly on indices, they grind up. So beware and careful out there. If you want to find out more about the method, follow the site and have a chat. What else have I got for you? I warned about gold the last time I did a video. I said gold's going to slip off. People aren't going to like me for saying it. It was a final throwaway. I didn't do the whole charting. We were still putting our trades on in our premium area, and we were also waiting to see if it would do a bigger rally before it sold off. But there you go. It went straight into its sell-off, and you can see how and why. A nice little grind line that's broken, and it's come off as well. Relative valuation to a lot of things, given the additional amount of money that's out there. Actually, gold isn't the cheapest. Other metals are relatively cheaper. I think central banks have been buying. That doesn't mean, by the way, I'm naturally a precious metals wannabe holding guy. I'd rather have a million in PMs than I'll have in fiat in a bank. But at the same time, I look at charts, and if it ain't the time to buy, I'm going to say it ain't the time to buy. If you can get it cheaper a little later, unless something major is about to happen now, and I would certainly say you should be accumulating generally and should already have some. But when you time lump sum acquisitions, timing absolutely matters. If you pay 30% less, it means you get 30% times more gold. Yes, so it's important. It's important. So as part of our reset part of who we are accumulators of metal. We can trade short and be buying and accumulating cash in our buying accounts for the periods when we are unloading and buying and stocking up. So this is the freedom of mentality. Do not confuse trading with your long-term fundamentally based investing strategy. This is what many people need to get. So lots of cool things going on. We've got lots of views to share on the markets, but as I say, I've got to give first service to my key guys. So keep an eye on that. Was there anything else I wanted to show you? I think no. All the other charts we're keeping to our greedy little selves for now, but we'll always give you a wee update. So the short on gold, yep, it's in, and I think it has a little further to go. We have targets in our premium community. You can find out more about that as well when you chat to our guy on the website booking sheet. Final thing, Brexit, you're going to be betrayed on Brexit. There's going to be possibly a couple of scenarios for you on that. A deal to end all deals, a final concession out of the EU. Peace in our time, to try either avoid the European elections because they know they're going to get a hiding. That's one particular scenario I have. Or they'll do the European elections and potentially it might swing quite a bit to the Brexit parties, of which there are very few. Basically, they're all fascist parties. All the SNP, the Labour, the Tories and the Lib Dems all want you to be in the EU, regardless how you voted yourself. That's what they'll deliver. And a very, very fake deal to go along with that. Anyway, I'm getting into Reset Sniper stuff. It's the charts today. It's the charts. Bad boy. Keep watching them. Keep enjoying them. Follow the Market Sniper YouTube channel. Follow the Crypto Sniper. There will be updates there, although it's quiet for now. But remember, quiet builds future movement. And then, of course, on the Reset Sniper, we'll be updating you on some other very, very interesting topics, speculating on how it all goes down and how you can build your wealth at a time like now in this reset mad environment where state just keeps tightening the ratchet on your freedoms. Okay, I'm Francis. I'm the Crypto Sniper, the Market Sniper, and the Reset Sniper. Bye-bye for now and enjoy those equities. Keep watching and we'll see if we win or don't. Bye for now.